Vanakkam, Namaskara and Namaskaram, and welcome to this session of CMA Final Indirect Taxation. So yes guys, indirect taxation is 100 marks paper for your CMA final syllabus, and not only it is one of the main papers of your CMA final which will give you the qualifying degree of CMA final, but it is also the strong pillar of Indian economy. And indirect taxes as such is a strong pillar not only for Indian economy but for world economy as a whole. Indirect taxation is the most important source of revenue for Indian government, or for any government for that matter, any government which is there in the world. One of the major source of revenues is indirect taxation, and indirect taxation definitely holds a very important and useful, it has a good role to play. It has got a lot of importance in the economy, in the development of the economy, and in running of the economy as such. So yes, here we have to start today the paper Indirect Tax Law and Practice of Group 4 of CMA Final for all of you. So what are we going to cover in this entire syllabus? Guys, in the entire syllabus, we are going to cover all the chapters which are listed in the study mat of the CMA Institute, the practical questions which are there in the CMA Institute, as well as the past examination questions which are there in the CMA Institute study mat, or the examination papers. We are going to cover everything as per the syllabus which is prescribed by the CMA Institute. Before we come on to the course, yes, I know this is the first class of your syllabus. So before we come on to the course, let us get familiarized with the syllabus a little more. And let me tell you, why have I colored red, yellow and orange colors on the screen? What do they signify? And what kind of analysis have I made for this particular subject for all of you? So let us first start the analysis of this particular subject. So the chart in front of you demonstrates the importance levels of each of the chapters which are there in the syllabus. So why are we even bothered about importance level of each of the chapters? Okay, so guys, in CMA Final, we have to, along with the hard work, be also involved in smart work. We need to do smart work. We need to analyze the patterns which have been coming in the examination in past years, and have to analyze which chapters are more important, which chapters are less important. So are you trying to hint that the chapters which are less important, we are going to leave those chapters, we are going to not study those chapters? The answer is a big no. Guys, it's a professional examination, so you cannot even think of leaving any chapter before going to the examination hall. Of course not. We are not going to leave any chapter before going to the examination hall. So then what is the use of doing such an analysis? Chapter A, chapter B, chapter C, most important chapters, less. So why are we doing this? Guys, the simple reason why we have to and we should do this is because we will lay more emphasis on the important chapters in terms of revisions. So while doing our revisions, we will take more time to revise the important chapters. We'll take little less time to revise the less important chapters. That is the only difference which I'm going to, which my preparation is going to have of this analysis. In no way I'm trying to say that you leave the chapters which are less important. Absolutely no, that is not an answer. That is not an option at all. We are not going to leave any chapter. So guys, in your syllabus, we have the portions divided into two parts, section A and section B. Section A, which is Goods and Services Tax Act and Rules, it contains almost 70% of your paper. Guys, this is not strict bifurcation, okay? It can go a little over and under depending upon how the examiner creates the examination paper, but still, just to give you a broad idea, GST will have 70% weightage in your syllabus, and other laws like custom acts and rules and foreign trade policies, etc., it will carry 30% of your weightage. We have 27 chapters in your syllabus, starting from supply, time of supply, place of supply. Of course, these are the basics of GST which we need to cover for sure. So these chapters are of course there in your syllabus. Plus the best part about CMA syllabus is that we don't only have to study the 1200 pager CMA final study material which is being provided to you, but we also have to study the CMA Intermediate indirect tax study material. So yes, my study mat will comprise of two things. Number one, study mat of the institute, which is prescribed for CMA final students, and number two, the relevant portions of CMA Intermediate study mat as well. So you have to cover two study mats. Number one, the study mat of CMA final. Number two, the study mat of CMA Inter. So why this laborious work for us, huh? Why such a traumatizing situation for us, guys? This is how CMA constructs its taxation syllabus. Same is applicable for direct taxation also. You have group 3. If you are giving your group 3 in the upcoming examination, then please remember that in your group 3 you have to cover both the things, which means that first you have to see the study mat of intermediate, and then you have to study mat of final. In fact, for group 3 direct taxation, study mat of final doesn't have chapters like PGBP, capital gains. It is only given in the study mat of intermediate, and therefore it's mandatory to revise the CMA intermediate study material as well. In my lectures, in these lectures, you'll get a complete coverage of whatever is relevant from an examination standpoint, be it CMA intermediate, be it CMA final. Both are covered in my lecture, so you need not worry about the coverage. It will have everything. Okay, sir, got it. Sir, please tell us one more thing. Sir, we already have studied CMA intermediate indirect taxation. We have already studied that. So in your lectures, do we expect that you will teach the CMA intermediate study mat again, or the basics again? No, guys, you should not expect that. I will presume that you are very well versed with the CMA intermediate study content, and you are well versed with basics. I will not be repeating the basics again, and this is an absolutely wrong answer. To answer your question, yes, I will teach indirect tax in a manner that, assuming that you have not studied CMA, you have not studied indirect taxation GST ever in your life. I will start with basics. So won't it waste our time? No, guys, it will not waste your time. It will be a good revision. It will be a good recapitulation of whatever you've done in your CMA intermediate, whatever basics you've studied over there. It will be a good revision for that particular syllabus. So I will be picking up all the topics from scratch. I will be picking up all the topics from basics. From very basic, I'll be taking up all the concepts. So if some of you have not studied indirect taxation that well in your intermediate, need not worry. In our classes, we are going to cover the syllabus from basics. I will teach you the basic concepts first, and then I will jump on to the high concepts or the advanced concepts. So these classes will be an end-to-end solution to your indirect taxation syllabus. Everything will be covered strictly as per the CMA study material. So you are repeating this CMA study material again and again. Guys, why I'm emphasizing upon this point is that although law is the same, but the depth in which law is covered in other courses is very different from the depth in which the law is covered in CMA final. So you need to be cautious of the fact that we need to cover the syllabus as per the CMA study mat. Even if you have friends who are taking coaching from teachers who are teaching both CA and CMA students, in that case also, you should tell them that, okay, it's okay to take coaching from teachers who are not exclusively teaching for, CMA syllabus, but you must mandatorily cover CMA study mat, because the examiner is going to see CMA study mat while preparing the examination, paper for all of you. So it's really important to cover the CMA study mat, and that is what we are going to do in this particular class from the scratch. So yes, let us see this analysis which I have made using Scanner. Scanner is the 10 years attempt paper, the questions which are compiled for last 10 years, that they are included in Scanner, and Scanner will contain all the papers which are relevant in the past years. Scanner will have questions from all those chapters, and we can see which chapter holds more weightage, which chapter holds less weightage. We can see clearly through Scanner. I've made that analysis for all of you. Alright, so now please understand the color coding. Okay, although in the camera you might not be able to see the chapter name very well, but it's okay. You will be able to see the color coding well. Red color denotes category A chapters. Orange color denotes category B chapters. Yellow color denote category C chapters. I will be uploading this PDF on the Google Drive also. You can fetch this particular PDF from the Google Drive as well. So that is not a problem at all. So red, orange, yellow, we are going to discuss these chapters according to their importance. And how have I decided about the importance of a particular chapter? Guys, it is using average weightage of the marks which it it has held in last 10 years, in last 10 attempts, not 10 years, 10 attempts. So 15.3 marks, first chapter, last 10 attempts. So this is definitely the most important chapter of our syllabus. It will be categorized as category A, supply under GST, a refresh, 15.3 marks on an average in past examination. So very, very important chapter, category A chapter. Second one is time of supply. Time of supply means that we are going to study how to determine the time of supply. What is the time when the supply has taken place, that we are going to study. It again is appearing for 5.5 marks in the last 10 attempts of examination. Again, I've categorized it as category A chapter. So any chapter which has come in past examination for more than 5 marks is category A chapter on an average. Okay, it's a category A chapter. So red is category A chapters, B is category B chapter, red is category A, orange is category B, and yellow is category C chapter. Now you will be astonished by an analysis that I've done using this the scanner. The analysis is that chapter A, category A and category B in combination will carry about 70 to 80 marks of your entire paper. Although it has come out to 86%, but I'm discounting 86% because, guys, it's a professional examination. Anything can happen in this professional examination. So we have to be very conservative. But even if we are conservative, then also we can easily conclude that 70 to 80% of your paper will be from category A or category B chapters. And you know what? Out of the 27 chapters that are highlighted on this particular screen, 13 chapters are A and B chapters, category A and B chapters, which means that 50% of your syllabus will cover 70 to 80% of your examination. So we are going to focus on this 50% more. We are going to revise this 50% one extra time. We are going to lay more emphasis on this 50% of the syllabus. That is the analogy which I want to draw from this particular this particular strategy. Okay, so now the relevance, I think now you will be able to understand the relevance of this particular chart that is presented before you day one, before even starting the entire syllabus. I'm emphasizing on the importance of each and every chapter. And guys, I have listed down all the chapters in this particular sheet. You can refer to this sheet which is uploaded on the Google Drive, and you can see how many chapters are there. 27 chapters, 17 chapters of GST, then 10 more chapters of Customs Act. This in total will form our syllabus for GST, indirect tax law and practices, that we are going to start today with a bang, with a strong determination that yes, we are going to score more than 80 marks in GST. So are you determined to score more than 80 marks in GST along with me? Answer is a big yes. And I'm very sure that cost audit, BVM, SPM and IDT, these three subjects are definitely the subjects which you can actually score 80% of more marks or more marks in these three subjects. These are so simple, so concise, their course content is limited, that scoring 80 and above in these three papers is definitely not a difficult task. So yes, let's start IDT, let's start GST, let's start CMA Final Group 4. And yes guys, after Group 4 you're going to step into the professional world. You'll be a professional. So the last hard work, the tough time that you're facing, the last of this lot is Group 4, and we are going to start GST today. So sir, what are we going to start today? Are we going to start the first chapter of GST, which is supply under GST, a refresh? Answer is no. We are not going to start the first chapter today. Guys, I'm going to start a chapter which is not in your syllabus today. So what do you mean not in our syllabus. What do you mean by that? If the chapter is not in our syllabus, then why are we studying that chapter? So guys, just to give you a basic idea about indirect taxation, let us first have one small discussion on introduction of GST. This chapter is not there in your study material. If you open your study material, this chapter is not there. I have pulled out this chapter from CMA Intermediate study material. It's important to lay foundation of indirect taxation, GST, with all of you, so that we are able to understand the concept of GST, and therefore it's important to start introduction to GST. Sir, from an exam standpoint, is it important? Answer is yes, because this is the platform, this is the basis of your entire concept, the technical concepts of GST. It's very, very important from an exam standpoint also. Yes, you have to study it religiously, wholeheartedly, and by any chance if you have forgotten the basic concepts of GST, because it's time since you have given your intermediate examination, it's a long time since then, so you might have forgotten many things. If you've forgotten many things, then this is the right opportunity to revise, recapitulate your entire intermediate study of GST, indirect taxes. So let's start introduction to GST. Alright, so introduction to GST. Before we come on to GST, the first question is, what do you mean by tax? So the word tax is derived from a Latin word which is coming as taxo. Taxo is the word from the word tax is derived from. And what is tax? Tax is a compulsory contribution. Compulsory means mandatory contribution to government of India. Why does government collect tax? Government collects taxes for meeting its day-to-day expenditure. Whatever expenditure government does on the infrastructure, on the people, on the welfare, on the education, on the food, on the housing, on the dams, bridges, roads, it has to have a source for it, and the source is collection of taxes. So collection of taxes is the source. Collection of taxes is the basic revenue for government, and government has to collect this revenue. So tax is nothing but a compulsory contribution. Compulsory means it's not optional, it's mandatory. You have to mandatorily pay taxes to government of India, be it in the form of direct taxes, be it in the form of indirect taxes. You have to mandatorily pay the taxes. So it's a compulsory contribution to government revenue on. So there are certain events on which the tax is required to be paid. So tax is always based on events, that if this happens, then you have to pay taxes. And the event on which taxes are paid, which we are going to focus on in our studies, will be number one, income earned. If you earn profits, if you earn gains, if you earn salary, if you earn income from house property, then you're going to pay taxes. So the first event on which your taxes will be based out of, your taxes will be based on, the first event will be income which is earned. So if you earn any income, if you are earning profits, if you are earning capital gains, if you are earning house property income, if you are earning salary, then you have to pay taxes which are in the form of direct taxes. Income Tax Act 1961 is the act which will tell you about the direct taxes. So that is the Income Tax Act 1961. So income earned, the income which is earned on which taxes are paid, they are known as direct taxes. Then second form of event on which taxes are required to be paid is when you manufacture a product, when you produce a service, when it is consumed, manufactured or sold, like sales tax, like indirect taxes. So indirect taxes is levied on products or services when they are consumed, manufactured or sold, like sales tax, like excise duty. In old regime, in the old in the past, the structure which was there was of payment of indirect taxes on goods which are manufactured. That is known as excise duty. And when the goods are sold, then it's known as sales tax. So sir, tell us one thing. This is the event which is triggering direct taxation. This is the event which is triggering indirect taxation. Absolutely yes. So sir, is this the bifurcation between direct tax and indirect tax? Yes guys. So this is direct taxation, this is indirect taxation. So this is the event which is triggering payment of direct taxes, and this is the event which is triggering payment of indirect tax. Now sir, please tell us one thing. Is there any other tax apart from direct tax and indirect taxes? Is there any other way in which the taxes are required to be paid? Yes guys. In erstwhile decade, there was another tax known as the wealth tax. If you are holding property, then you had to pay wealth tax. There are other form of taxes also. Property tax. There was a tax which was by the name of fringe benefit tax. So apart from direct and indirect taxes, which we are going to study in our CMA final, there are other taxes as well, which I think you'll be getting privy to when you are when you'll be entering to the professional world. So this is not the conclusive world of taxation. Taxation world is very vast, and taxes are more than only income tax and GST or indirect taxes. So now we move on to the basic difference between direct tax and indirect tax, and I hope you must have already learned about this difference in your CMA Intermediate, but yes, you might not remember it, so it's my duty to revise what is the difference between direct and indirect tax for all of you. So this is the difference between direct and indirect tax. Okay, direct tax, the incidence and impact is on the same person, that is the taxpayer. I'll give you a very simple example of incidence and impact. What do you mean by incidence? What do you mean by impact? Okay, so I am CMA Nikkhil Gupta. I have a coaching institute and I earn income from coaching institute. Government of India is telling me that, oh Mr. Gupta, your PGBP, profit and gains from business and profession, is so and so amount, please give us taxes on it. I calculate the tax and pay it to Government of India. This is direct tax. So please answer my two questions. Please answer my two questions. Question number one, please listen to it very carefully. Question number one, who is paying the tax to Government of India? Nikkhil Gupta is paying the direct tax to Government of India. Okay. Question number two, who's bearing the burden of tax which is being paid to Government of India? Of course, Nikkhil Gupta is bearing the burden of the tax which is being paid to Government of India. So the incidence means liability to pay, is of Nikkhil Gupta, and impact means who's bearing the burden, it is again on Nikkhil Gupta. So both incidence and impact is on Nikkhil Gupta. Therefore this tax is known as direct tax. You will become a CMA, okay, in a few months. Yes, you are destined to become a CMA in a few months. You will, after becoming a CMA, you will appear for campus, and in the campus you'll get a good job, right? A package which is worth a lot of money, and you'll get recognition in the corporate world, and you will be really happy to get some good amount of money. After you become a CMA and you get good amount of money, you will have to pay taxes to Government of India from your salary, because that's your salary income. Okay, so you have to pay taxes to Government of India. The income tax will be paid by you, and you will be bearing the burden, because it will be your salary which will be subject to tax. So both incidence and the impact will be on you, on the same person. Now we take an example of indirect taxation. Okay, so I want to buy a camera for my classes. I run classes and I want camera for my classes, and I want to buy a camera for my classes. Okay, now camera man tells me that, sir, you can buy this camera. This camera is for 40,000 rupees. I like the camera which is for 40,000 rupees. The salesman tells me that, so this camera is for 40,000 rupees. Over and above the 40,000 rupees, you also have to pay indirect taxes, which is worth say 10% of 40,000, 4,000 rupees. I am asking the shopkeeper, please tell me, why are you charging tax from me? Are you Government of India? Are you Government of India? Government of India is eligible to, as per the Constitution of India, Government of India is eligible to charge taxes from me. Who are you to charge tax from me? Who are you? So the shopkeeper will tell me, no, sir, this is indirect taxation. Indirect taxation, Government of India gives a responsibility to some person who's selling the product to collect taxes and remit it to Government of India. So who has got the liability to pay in case of indirect taxation? It is the shopkeeper, and burden will be passed on to the ultimate consumer. So who's going to bear the burden? I'm going to bear the burden for 4,000 rupees. I'm going to bear the burden for the GST amount for the indirect taxation. But who's going to pay to Government of India? Whose liability is it to pay GST to Government of India? It is shopkeeper's liability. So in case of indirect taxes, there's a bifurcation between incidence and impact. Incidence means liability to pay. Liability to pay is of an intermediary like a shopkeeper, and the impact is on the ultimate person who's buying that particular product. You go to market to purchase toothpaste. You go to market to purchase some garments or shoes or specs, anything. You have to pay taxes over and above the price of the product, and that tax is to be paid to Government of India. Who's going to bear the burden for that tax? You. And who's going to pay it to Government of India? Shopkeeper. So there's a distinction between the incidence and the impact. Incidence is on someone else, impact is on someone else, and that is the bifurcation between the incidence and impact. And that is the crux of, or that is the basics of indirect taxation. Indirect taxation will have a separate incidence and impact. Incidence will be on some other person. Impact will be, or the person who will bear the cost will be absolutely a different person altogether. That is the difference between direct taxation and indirect taxation. This diagram will also make it absolutely clear. Okay. And before I move further, a statutory warning, a conscious caution. Guys, whatever diagrams I will show you in the class, so we'll have plethora of diagrams in the class. Okay. These are diagrams which will make in the class. Okay, all these diagrams should be there in your register in your own handwriting. Yes, the diagrams in PDF form will also be stored in the Google Drive, but what I'll prefer, what I'll advise you to do is please draw these diagrams yourself. It will be very, very useful if you draw these diagrams yourself and write it in your register. It will be very, very useful to you. Trust me, you're going to definitely take a very few minutes to revise the entire syllabus just before the examination if you draw these diagrams by yourself. So don't take printout of PDF which is stored in the Google Drive. Draw these diagrams yourself in the register. You'll really be benefited by this extra effort that you're going to do in the class. Okay. So next difference between direct and indirect taxation is, okay, I was on this particular diagram. This diagram will also demonstrate the difference between direct and indirect tax. So if I do as wide, the visibility will improve. All right. So who's the taxpayer in this case? Taxpayer are these two gentlemen are the taxpayer. So taxpayer remits. This is Government of India. Taxpayer, where taxpayer remits the taxation directly to Government of India. Over there, we say that this is direct taxation, like income tax. Income tax is a direct taxation, where the taxpayer directly pays the taxes to Government of India. So this is direct taxation. And wherever there is an intermediary, like a shopkeeper in between, so the taxpayer who's bearing the burden will pay the taxes to the shopkeeper, and shopkeeper will then remit it to Government of India. Wherever there's an intermediary, that will be termed as indirect taxation. So this is an example of direct taxation. This is a pictorial representation of direct taxation, and this is a pictorial representation of indirect taxation. So yes, a refresher. You might now be recalling your CMA Intermediate classes. Yes guys, CMA Intermediate will be an absolute recall in these classes, because that will form the foundation of your studies in CMA Final. Not only in indirect taxation, but direct taxation, accounts, law, every subject. Your basics starts from CMA Intermediate, even cost audit. So in group 4 you have cost audit, right? The basics were taught to you in your audit in CMA Intermediate. Yes sir, we remember. Next difference between direct and indirect taxation is levied on income. So direct taxation is levied on income. However, indirect tax is levied on goods and services, particularly on sale of goods and services or consumption of goods and services. So the direct taxation is levied on income, like income tax, and indirect taxation is levied on goods and services, sale of goods and services, or manufacture of goods and services, or export of goods and services. There's a different event which is related to indirect taxation, which triggers indirect taxation, and there's a different event which triggers direct taxation. So there are difference in events which triggers direct and indirect taxation. Income tax, GST and custom duty is the example of indirect taxation. Then direct taxation is progressive in nature. Indirect taxation is regressive in nature. There's a very, very important differentiating factor between these two. I'll explain you what is this difference. Okay. Now, suppose if I am earning an income of 10 lakh rupees and you are earning an income of 50 lakh rupees. Will both of our taxes be same or different? Sir, of course different. I'll be paying on that 10 lakh rupees, I'll be paying 30% of tax, right? Which is 3 lakh rupees. And you have an income of 50 lakh rupees, right? So you'll be paying 30% of 50 lakh, which is 15 lakh rupees. On 10 lakh, I'll be paying 3 lakh rupees. On 50 lakh, you'll be paying 15 lakh rupees. So there's a difference between taxes, what you are paying and what I'm paying, depending upon my earning. Obviously, if I earn more, I'll have to pay tax more. Mukesh Bhai Ambani, the owner of Reliance Industries Limited, he'll be paying a huge amount of tax as compared to us, right? So, there's a South Indian joint which I absolutely adore and love, which is Saravanan Bhavan. It's a South Indian chain which is opened in India, and I'm astonished to see that its branches are also abroad. Their branches are in London, Dubai, and many parts of the world. This particular chain is widespread. Its earning is huge. So the kind of taxes which Saravanan Bhavan is paying, will it be same to what a local idli sambar or a local dosa vendor will be paying? Answer is no. There will be a huge gap between the taxes which are paid by a local vendor versus which are being paid by Saravanan Bhavan. There will be a huge difference between, because income is higher, higher taxes. Income is lower, lower taxes. Absolutely right. Now I'll give you another example. For making idli, you purchase rice. Idli is made out of rice, right? So the price of rice which will be paid by a local vendor and the price of rice which will be paid by Saravanan Bhavan, will it be same or will it be very different? Sir, because Saravanan Bhavan will be purchasing in bulk, there will be some bulk discount, but more or less similar. 10 rupees per kg will be paid by the local vendor, and 50 rupees per kg will be paid by local vendor, 50 rupees per kg will be paid by Saravanan Bhavan. Maybe not 50, 45 rupees per kg by Saravanan Bhavan. That will be the difference, but not much of difference. Okay, so if there's not much of difference, then would there be much of difference in indirect taxation? So indirect tax which Saravanan Bhavan is going to pay, is it different from the indirect taxation that local vendor is going to pay? The per kg indirect tax. So will there be a difference? Answer is no. If there's a 10% indirect tax which is levied on purchase of rice, then that 10% is same for a local vendor or as compared to a big chain. It is absolutely the same. I'll give you another example. Mukesh Bhai Ambani, the owner of Reliance Industries Limited, he goes to buy a Colgate, Pepsodent or any other toothpaste, right? He's paying, so the toothpaste is worth 90 rupees suppose, and he's paying 9 rupees GST on that particular toothpaste. So 90 rupees and 9 rupees GST is there on that particular toothpaste. Now my question to all of you is, if we purchase Pepsodent or Colgate, will we pay same amount of indirect tax to Government of India, 9 rupees, or will it be lesser for us? Answer is, it will be the same. It will not be lesser for us. It will not be lesser for us. It will be the same. Now that is the basic difference between direct and indirect taxation. Indirect taxation is flat for all the taxpayers. It doesn't vary according to the income of the taxpayer. However, direct taxation varies from taxpayer to taxpayer. Direct taxation is not there if you are incurring losses in your business. But there is no way that you can avoid indirect taxation. Indirect taxation will be levied even if you are incurring losses in your business. So direct taxation is progressive in nature. Progressive means higher tax for higher income. Progressive means you progress, you have more tax liability for people who are earning more income. So you have progressive taxation. However, indirect taxation is regressive in nature, which means you have same tax for everyone irrespective of the paying ability. Even if your paying ability is low, then also guys, you have to pay same taxes. If you are buying Colgate, if you are buying garments, if you are buying shoes, if you are buying raw material for your factory, if you are buying any kind of services for your factory, your GST will be the same whether you are a superbly earning person or you are a loss making person. Your GST will absolutely be the same. How direct tax will be zero if you are loss earning. If you are not earning any income, so suppose if you are, after qualifying CMA, you do not get job for say 6 months. Although it is a rare possibility, CMAs always get jobs. Okay, suppose I'm giving an example that for 6 months you do not get any job. After qualifying CMA, you're not getting any job. If you're not getting any job for 6 months, you won't earn any salary, right? So your direct taxation will be nil. But will your indirect taxation will also be nil? When you buy something for yourself, a shirt, a trousers, a specs or anything, will the shopkeeper tell you, oh, your earning is zero, you are CMA and you are not earning anything, you have zero salary, okay, don't worry, I will not charge tax from you. Will that happen? Answer is no. So indirect taxation is irrespective of your income level, is irrespective of your paying ability. indirect taxation will definitely be charged from you. However, direct taxation will be depending upon your ability to pay, will be depending upon your your income. Higher the income, higher will be the tax slab rate. Lower will the income, lower will be the tax slab rate. Nothing of this is there in case of indirect taxation. Okay, sir, got it. Now, this is the difference between direct and indirect taxation. Now over here I'm going to tell you one very important fact about indirect taxation and direct taxation. Okay, both direct taxation and indirect taxation are brothers. Both are brothers, they go hand in hand. An organization has to pay direct taxation. First of all, they have to pay indirect taxation on the transaction which they are doing on a daily basis, the commercial transaction which they are doing on a daily basis. They have to pay indirect taxation, and whatever income they are earning from this commercial transaction, on that they have to pay direct taxation. So both are brothers or brother sister. Okay, but who's the elder one? My question is, who's the elder one? So what do you mean elder one? Huh? What do you mean who's elder, who's younger? What is meaning of elder one? Elder one means who's older and who's younger. So the answer is indirect taxation is older. Indirect taxation exists from a very old age. At a time where people didn't used to know the word taxation, what is taxation. At that time also indirect taxation was existing in various forms. I'll tell you how. So guys, all the coastal areas of the world, Europe, India, Africa, America, all the coastal areas have got coastal states. Like in India, we have coastal states like Vizag, Visakhapatnam, we have Tamil Nadu, we have Mumbai, we have Kolkata. These are coastal states which are attached to the coastal boundaries of the country. Why are these states important? These states are important because these are the hub for industrial exchange of goods and services with other countries. The countries which are going to do trade with us, they are going to enter India using these channels, using these trade links. These are the hubs, or these are the coastal areas. These are the trading points of our country. And similarly, for Europe, there's a country called Prague. Prague is one of the leading merchant. It is also known as merchant city. Merchant city means those who have to trade in Europe and they have to enter Europe with their products and they have to trade, they have to come in Prague. They used to be in Prague and they used to sell their products in Prague. So Prague is known as the merchant city. So if you visit Prague and you visit, there's a very famous center of Prague where there is a big clock also installed. If you visit that particular place, the guide is going to tell you that this is the place where all the Romans and Italian people and all used to accumulate together and exchange goods, even in barter system. So indirect taxation is existing even when money was not there, even when currency was not there. Indirect taxation was there, even when currency was not there. So indirect taxation is the oldest form of taxation which is existing in the country and the world as such. Direct taxation came much later. Earlier there was indirect taxation. So what was the triggering point of indirect taxation at that point in time? The triggering point was that if you want to sell products on my land, if you want to sell products to my people, if you want to manufacture something on my land means government's land, king's land, then you have to pay indirect taxation to the king for permission to do activity of manufacturing, trading, or any other similar commercial activity. That is the thought process, or that is the history behind indirect taxes. And indirect taxes are much older than direct taxes. Indirect taxes were existing in very different form in the medieval ages, and even pre-medieval ages indirect taxes were there. So if I were to compare the age of direct and indirect taxation, I would say that indirect taxation is older, is the elder brother, and direct taxation is the younger brother. Indirect taxation has got widespread acceptability worldwide, because yes, kings want kings want to have revenue to be able to run their organization, to be able to run their country, and all the ministerial duties they want to fulfill. They want to fulfill welfare of the society, so they have to mandatorily have indirect taxes. So indirect taxes dates back to that era. So got it? That is the importance of indirect taxation, guys. That is the the history of indirect taxation. That is how it has developed over the years. It has evolved over the years. It has grown over the years, in various forms and in various ways. So even when there was barter system, then also indirect taxation were there. And indirect taxation, whenever we talk about indirect taxation, the ultimate burden is to be passed on to the customers. The burden is passed on to the customer. So assume that we have a merchant who's selling goods, who's selling clothes, who's selling shoes. He's from America and he's in Mumbai, right? He has got a bundle of garments over his back, and he's selling, yes, I have some good garments, do you want to see them? So I'm talking about pre-medieval era, huh? There's a merchant from America who's in Mumbai, who's carrying on some goods on his back, and he's selling that goods. Oh, I've got some good good shoes, good t-shirts, good shirts, and I'm from America. So the government of India or the Mumbai king will tell him, oh, if you're selling goods at our land, and you have to pay us taxes. So he'll pay the taxes. And will he bear those taxes on his own? No, he's going to charge it from the customers who are going to purchase the garments and the shoes. He's going to transfer the taxes. And that is the reason why we say that in case of indirect taxation, incidence and impact is on two different persons. Two different persons are the people who are having an impact on. There's a different person who's bearing the impact. There's a different person who's bearing the incidence of indirect taxation. That is how two of them are separated out. So that is the broad history, and that is the broad backdrop of indirect taxation as such. Now coming on to our subject. Okay, our subject is GST. So in 2017, a revolution struck the Indian economy, which was keenly observed by the entire world, because this phenomenon of a democracy having one of the largest populations of the world, changing a mechanism of indirect taxation completely, eradicating the old system and infusing the new system, it was a Herculean task. It was a very, very difficult task. So it's a history which was created back then in 2017 with the launch of GST. Before GST, there were taxes like excise duty, there were taxes like sales tax, there were taxes like VAT, value added tax, there were taxes like service tax. These are four kind of taxes which were there pre-GST era. So, but tell us one thing, what led to this revolution? Why this revolution? Why do we require GST? Why couldn't we, continue with the erstwhile taxes, which is service tax, excise duty, your VAT? Why couldn't we continue? What were the lacunas in those earlier system because of which GST was thought through? GST was implemented. What was the criteria behind it? Okay, before telling you the lacunas of the earlier system or the problems with the earlier system, let me tell you a historical advent of GST. So if you think that GST was envisaged or was implemented in 2015, 16, 17 types, you are absolutely wrong. GST was first thought as early as in the year 1980s by our erstwhile Prime Minister, Mr. Rajiv Gandhi. Yes, the thought process of GST was there since 1980. And after that, in 1990, there was a big change in the economy. What was that big change in the economy? 1990, what was the big change in the economy? What happened in 1990? It is LPG. In 1990, LPG was introduced. What is LPG? LPG is liquefied petroleum gas. Yeah, cost-effective way of fueling our machines, fueling our vehicles. It was a cost-effective way of fueling our various machinery. LPG, liquefied petroleum gas. This was introduced in 1990. No, LPG doesn't mean liquefied petroleum gas. More often than not, I get these answers from you. Yeah. That, sir, LPG means liquefied petroleum gas. No, LPG doesn't mean that. LPG means liberalization, privatization, globalization. Indian economy was opened up to the world, and those companies who wanted to establish their businesses in India, they were asked to come to India so that India can grow. India can have state-of-art technology, because if a person is coming to India, of course it will bring technology with itself. Of course it will bring the much needed infrastructure in India. Latest technology, latest technicians, latest way of doing things will be introduced in India. So LPG was a major breakthrough in Indian economy. Industrial revolution came after LPG. So the idea of GST was thought through in the year 1980s itself, but it was not implemented. But when in 1990s, foreign companies came to India, MNCs came to India, and they saw the lacunas in the erstwhile indirect taxation regime, they also forced Indian government to change their system to a one nation, one tax system, which is GST. So after 2000, the quest for having a one nation, one tax in case of indirect taxation was increased to a very, very large extent because of advent of MNCs, because of the advent of global giants like Oracle, Microsoft, SAP, Google. All these global giants came to India for establishing their business, for doing their business, and as a measure of ease of doing business, our government was committed to wave off the lacunas which were there in the erstwhile system, and that is when GST was introduced. So GST is not a game which happened in say 4-5 years. No, it took decades and decades to finalize the concept of GST and to finalize the the advent of GST and how GST could be implemented. There were lot of deliberations, lot of thought processes, lot of mind-boggling sessions which were conducted to finally finalize GST. So it was a decade-long process. It was not a process which happened in say 4-5 years or so. Thought process was even 2-3 decades back. That is how old GST thought is. So thought in our politicians' mind, in our country's economists' mind was long back, but it was actually activated in say recent years after the advent of especially Modi government. It was activated in a very high fashion, right? That is how GST history goes about. Okay, sir, got it. So now, sir, please tell us, you have told us many times, you have repeated many times, there were lacunas in the earlier system. There were lacunas in the service tax regime. There were lacunas in the excise duty regime. There were lacunas in the VAT, value added tax regime. What were those lacunas? What was the need of GST? What was the problems in the earlier regime which was felt by Indian government and even by the industry, even by everyone who's a part of the industry? What were the problems which were felt in the erstwhile GST regime which led to such a great revolution in India, such a great mayhem in the Indian economy? What were the driving forces for it? What was the need for GST? So these are the 4 primary driving forces of GST. These are the 4 areas where GST was having a added edge, because of which it replaced the erstwhile law. These are the 4 areas which are the area of concerns for our earlier industry, earlier business, government of India, because of which GST was launched. What are these? Number 1, multiple point tax. Taxes were levied on the same transaction at multiple points. Second, multiple taxes on the same transaction, various kind of taxes were implemented. Number 4th, compliance burden. Number 3rd, compliance burden. Number 4th, partiality. Let us understand these points using example. Only then will you be able to understand it. So I'm taking example for multi-point tax first of all. So let's see what is the example of multi-point tax. What is the example of multi-point tax? And yes, you have to make this diagram in your register so that you are able to understand it well and you are able to comprehend it well. You have to make this example in your register also, guys. Please keep your register handy and draw this diagram in your register. Okay, sir. Alright, so I'm talking about a commercial transaction on which I will levy taxes based on the erstwhile indirect taxation regime, not the current regime. Okay, and I'll demonstrate how a single transaction will be subject to taxes at multiple points repeatedly, tax on tax, cascading effect of tax. I'll be demonstrating using this particular example. So I have 4 people in my diagram: Mr. A, Mr. B, Mr. C, Mr. D. I have 4 people in my demonstration. I will have 4 people and I have a commercial transaction which will involve these 4 people. Okay, sir. So Mr. D is the ultimate consumer and he wants to buy a dining table, which is 4-seater dining table. Mr. D is a consumer and he wants to buy a dining table, which is a 4-seater dining table. Okay. He places order to a shopkeeper. Mr. C is a shopkeeper. He is a shopkeeper in, say, Rajasthan. He would provide dining table to Mr. D. So he orders a dining table to Mr. C. Mr. D orders a dining table to Mr. C. Mr. C in turn will place order on to Mr. B. Okay, and Mr. B will actually manufacture the dining table for Mr. C, for Mr. D. So what is involved of Mr. A? Mr. A will supply wood to Mr. B. So what is role of Mr. A? Mr. A will supply wood to Mr. B. Mr. A is a wood merchant. He would buy wood from the farmers or the people who are growing wood in their farms. He would buy from the farmers and he will supply it to whom? Mr. B. Mr. B will actually manufacture the dining table. He is the carpenter sort of. He is the main person who's crafting the dining table. And who's Mr. C? Mr. C will apply marble. He's a marble merchant. Okay. So you've seen the dining table which have marble top on it. There's wooden legs, wooden bases there, and on the top of it there's a marble slab which is fit into the dining table. So Mr. C will fit that marble on the dining table and he will sell it to the ultimate consumer. That is the chain which we are going to follow. Okay. Okay, sir. Now first is Mr. A. Mr. A will provide wood to Mr. B. Now suppose Mr. A tells Mr. B, Mr. B, please tell us what kind of wood do you want? A good quality wood or a average quality wood? Mr. B says, no, we want a good quality wood because the customer is ready to pay good amount for the dining table. So we want good quality wood. Mr. A says, okay, if you want good quality goods, then I will supply you the best quality teak wood which is available in the vicinity, and it will cost you rupees 50,000. So Mr. A supplies wood, raw wood to Mr. B for making this dining table. What is the price that Mr. A charges? Mr. A charges 50,000 rupees from Mr. B. Now, Mr. B is about to pay 50,000 rupees to Mr. A. Mr. B is about to pay 50,000 rupees to Mr. A. Suddenly, there is a voice which can be heard from the sky. There's a voice which can be heard. Can you see anything above this particular 50,000 rupees? Can you see anything above it? Is there anything which is written above it? No, no. But there is someone who's sitting right above us. Who's? Government of India. Yes, Government of India is having a keen watch on all the commercial transactions which are happening in the Indian territory. It has a keen watch on all the commercial transactions. So this commercial transaction is also being watched by Government of India very, very carefully. Government of India is watching the commercial transaction. Mr. A is selling wood worth rupees 50,000 to Mr. B. This is being watched by the Government of India very, very carefully. Government of India is having a look at this particular transaction. And Government of India, suddenly when money is being exchanged, Government of India tells Mr. A, Mr. A, you don't have to charge 50,000 rupees from Mr. B. You also have to charge indirect taxes from Mr. B, which is amounting to 10%. In the country like India, we have an indirect tax of 10%. So you have to collect. How much money you have to collect? You have to collect 10% of the 50,000 rupees, that is 5,000 rupees also from Mr. B. So what is the amount that Mr. A is going to collect from Mr. B? It is 50,000 rupees plus 5,000 rupees, a total of 55,000 rupees. So Mr. B is going to pay 55,000 rupees to Mr. A. That is the order of whom? Government of India. Government of India is ordering Mr. A to recover 55,000 rupees from Mr. B. Now what will Mr. A do of this money? 50,000 rupees he is going to keep for himself, and 5,000 rupees he is going to pay to Government of India as indirect taxation. 5,000 rupees is going to pay to Government of India as indirect taxation. Fair enough, fair enough. Government of India has got the right as per the Constitution of India to collect indirect taxes on the transactions which are happening, commercial transactions which are happening between two parties. Government has the right to collect indirect taxes on all those transactions, and Mr. and Mr. B are paying taxes on that particular respect. So it's perfectly fine. That's okay. So what is the cost which has been incurred by Mr. B till date? It is 55,000 rupees. Okay. Now Mr. B gets the wood. Now he puts in his heart and soul in the wood. He would work day and night. He would rub the wood to make it shiny. He would do some carving, very fine carving he would do on the entire wood. He would make the wood termite proof. He'll make the wood water resistant. He would make the wood absolutely to meet the conditions or to meet the requirements of the customer. He's preparing the dining table to the best of his abilities, and he is absolutely putting in a lot of labor, a lot of time goes in preparing the entire dining table, but he's ready with the dining table. Now the question is, will Mr. B charge something for the labor which he has incurred for preparing the dining table? Of course, yes, he will charge. So we ask Mr. B, Mr. B, what is your labor which you have employed in this dining table? What is your labor value? So Mr. B tells us that I will charge 20,000 rupees as my labor value. I have worked really hard on this particular table. This is not a normal dining table. It's a finely carved dining table, and this fine carving would require a lot of time, lot of patience, lot of effort, lot of skill. For that skill, I'm charging 20,000 rupees for the carving itself. We say, okay, now, skills have got no value. The artists have got no value. So we say, okay, you charge 20,000 for this particular value addition which you have done in our dining table. This is known as the value addition. Okay, value addition, the additional benefit that it has introduced to the dining table. So Mr. B paid 55,000 for this dining table to Mr. A. Okay, now Mr. B is going to add 20,000 rupees, which is the value addition which Mr. B has done, and the total amount that comes out for this particular dining table is 75,000 rupees. This dining table is now worth 75,000 rupees after Mr. B's hard work which is put in the dining table. Now this dining table is worth 75,000 rupees. Perfect. This dining table is worth 75,000 rupees. Now this dining table is transferred to Mr. C. What is the role of Mr. C? Mr. C is a marble merchant. He procures marble, which are very fine quality marble. There's a very special marble known as the onyx marble. Onyx marble actually reflects when you see over it. It has got reflective value. So if it's polished, it reflects. Okay. Mr. C imposes this particular dining table with a marble. But before that, Mr. C has to pay 75,000 to Mr. B, right? Mr. B will charge 75,000 from Mr. C, right? Mr. B will transfer goods worth rupees 75,000 to Mr. C, right? So Mr. B is going to transfer a dining table worth rupees 75,000 to Mr. C, and he is going to charge taxes, charge the amount from it. Now again, same question arises to all of you. Can you see anything above 75,000? Is anything written above 75,000? Can you see anything which is written above 75,000? This time your answer is a yes. I can hear it because you have already had an experience. Yes, there is something above 75,000. Who's Government of India? And Government of India, after seeing any commercial transaction, has got a sharp eye on all the commercial transaction. After seeing any commercial transaction, Government of India would definitely demand its own shares of indirect taxation. So again, Government of India through the sky will order Mr. B, look Mr. B, do not only charge 75,000 from Mr. C, also charge the indirect taxes. Indirect taxes in India are worth 10%. 10% is the percentage of indirect taxes in India. So please charge 10% additional amount which is to be remitted to Government of India. So B says, okay, I'm going to charge 75,000 plus 7,500, which is 10% of 75,000 as IDT from Mr. C. I'm going to charge 7,500 from Mr. C. So 75,000 plus 7,500, this is 82,500. 82,500 is the amount which Mr. B charges from Mr. C for the goods which are prepared for Mr. C. 82,500. Now, out of this 80,500, 75,000 is the amount which Mr. B is going to keep in his pocket. Okay. And the rest amount, which is 7,500, this is going to be paid to Government of India. In fact, I'm going to highlight the amounts which are paid to Government of India. Okay. Let us highlight the amounts which are going to be paid to Government of India. So 5,000 is going to be paid to Government of India. Then 7,500 is going to be paid to Government of India. Okay, both these amounts are going to be paid to Government of India. Now finally, Mr. C, who's a marble vendor, he will fix marble on this particular dining table. After fixing marble on the dining table, he's going to sell this particular dining table to Mr. D. Now, we ask Mr. C, Mr. C, what is the cost of that marble that you are fixing on this dining table? And Mr. C tells us that the marble is worth 10,000 rupees. Yes, it's a very expensive marble. The dining table is quite big, 4x2 size, a quite big dining table, and the marble is quite expensive. So the value of marble is 10,000 rupees. 10,000 rupees is the value of marble. Okay, so the cost which Mr. C has incurred is 82,500, which was paid to Mr. B, right? Over and above this amount, 10,000 rupees is the value of marble which Mr. C has embedded in the dining table. So the amount which Mr. C is going to charge from Mr. D is 92,500. Yet again, can you see anything over and above 92,500? Yes, I can hear you. Don't think that, oh, sir, this is a recorded lecture, you won't be able to hear us. I can hear you across the camera also. Don't worry about that. I can hear you across the camera also. I can hear you. Just say, can you see anything over and above this 82,500? Anything written over here on this part of the board? Can you see that? You will say, sir, yes, we can see that. Okay. Now, a strict warning over here. Do not watch these lectures when your parents are around. Okay. Otherwise, they're going to say that you've gone bonkers. There's nothing which is there over here. And you're saying, yes, there is something over here. You've gone bonkers. Your parents will think like that. Okay. So don't watch these lectures when your parents are around. Watch these lectures when your parents are not around. Okay. Okay, sir. So, yes, there is something over here which is Government of India, and it will tell you that if you are entering into any commercial transaction, be ready to pay indirect taxation. 10% rate. Okay. So what is the amount of indirect taxation that we need to pay? 9,250. So what is the total amount which the which Mr. D has to pay to Mr. C? Okay, that amount is 92,500 plus 9250, which is 1,750 is the final MRP for Mr. D. Mr. D has to pay 1,1,750 rupees to Mr. C to buy this particular dining table. Okay. So guys, before we move any further, please note down this particular example in your register. Okay, I'll give you some sites so that you can note down the example in your register, and you can note down all the numbers so that I'm going to now complicate the situation a little more. So you please, I'm pausing here for a minute. You can also pause the video, but note down this entire example in a more clearer manner, okay, in a more readable manner in your register. Please note down this entire example in your register. That's very, very important before I move any further. Please note it down. Okay, so what is the MRP of this particular dining table? The MRP comes out to, or the price which Mr. D pays comes out to 1,01,750. Quite a expensive one, but yes, it is a very unique one, very rare one, therefore worth the expense maybe. Okay, all right. So this is the amount which Mr. D had to pay for this particular dining table. Now I have a question for you. The question is, what is the total amount of indirect taxation which has been paid to Government of India? What is that amount? The amount is 5,000 paid by Mr. A plus 7,500 paid by Mr. B plus 9,250 paid by Mr. C. So in total, what is the amount? 7,500 plus 5,000 plus 9,250. Total amount which is paid to Government of India as taxes is 21,750. This is the total amount of indirect tax paid to Government of India for this particular dining table, for this particular transaction. Absolutely, this is the amount. Okay, now my question to you, What is the rate of indirect taxation as per this example which is prevalent in India? Guys, at each and every step, you have added 10% of indirect tax in your calculation. So the rate of indirect taxation in India is assumed to be 10%. Now, let us compute the actual rate of taxation which Mr. D has paid to Government of India. So Mr. D has paid 1,01,750, out of which about 21,000 is indirect taxation. What is the percentage? 21750 divided by 101,750. It's more than 20%. It's even more than 20%. Whereas the percentage should be 10%. The indirect tax which is paid to Government of India is more than 20%. And that is where, that's exactly where the problem kicks in. That's exactly where the problem kicks in. The problem is that the actual tax which is being paid to Government of India is far, far, far beyond 10%. It is almost double of 10%. It is 20%. What is the reason behind it? Where mathematically have we gone wrong? We are all students of CMA, and our maths is quite strong. We have studied maths in our foundation level, and this is basic maths, guys. Where have we gone wrong? We are paying indirect taxes to the tune of more than 20%. However, the government is saying that the indirect tax rate is 10%. Where is the gap? Where is the gap? Where is the lacuna? That's exactly what drived the pathway to GST. This problem drived the pathway to GST. Now I'll tell you where is the problem. Please listen to this carefully. But before I tell you the problem, guys, please note down this example in your register. I'm telling again and again. Please pause over here. Please pause over here. Please write this example in your register so that you are able to understand it and also understand the calculation. Calculation should be very, very clear in your mind. Calculation should be absolutely, crystal clear in your mind. So calculation, you have to do this calculation yourself also to understand the next step. Next step is correcting the error which is there in this calculation. Okay, now, where is the problem? Why are we not paying indirect taxes to the tune of 10% and why are we paying at the rate of 20%? Mr. D is absolutely angry. Mr. D is absolutely exasperated. Why am I paying indirect taxes to the tune of more than 20%? However, Government of India is telling me to pay only 10%. Why am I doing that? Mr. D is absolutely angry. Mr. D is absolutely exasperated by this particular phenomena which has happened with Mr. D. What's wrong over here? What's wrong? I'll tell you what's wrong. Okay, let's start with the initial part of the transaction. The initial part of the transaction is where Mr. A sells wood to Mr. B. Mr. A sells wood worth 50,000 rupees to Mr. B and charges 10% of indirect taxation which is paid to Government of India. This is indirect tax which is absolutely there in the country, and this indirect tax is being paid to Government of India. This indirect tax is being paid to the relevant authorities which are demanding for indirect taxation, and Mr. A is giving this indirect taxation to Government of India, which is absolutely fair, guys. Okay, so 50,000 indirect taxation worth 10% being paid to Government of India. So 5,000 rupees of indirect taxation being paid to Government of India. Okay, now in this particular transaction, if we move further, then what is the cost to Mr. B? The cost to Mr. B is 55,000, right? This includes 50,000, and again this 55,000 forms a part of 75,000, and 75,000 10% is 7,500. So for the second time 50,000 rupees is incurring indirect taxes. 5,000 has already been incurred at level 1. Again at level 2, when this calculation is being done by Mr. B, again 50,000 rupees is subjected to tax. So 7,500 contains 5,000 which has already been levied by Government of India, and Mr. A has already paid that amount. This is known as double taxation. This is known as multiple point taxation. So on 50,000, tax is levied at first leg, which is over here, and on same 50,000, tax is also levied on the second leg, which is over here. 75,000 contains 50,000, and that is subjected to indirect taxation once again. That is the problem which is there over here. And the problem has not ended as of now. The problem is continuing. What is the next level of problem? We'll see the next level of problem. So the next problem is, what is the next problem? Guys, the next problem is that this amount of 50,000 is again included in the next limb, and once again 50,000 gets taxed. How? This is the next limb. 82,500 has got a portion of 50,000 as well. 82,500 has got a portion of 50,000 as well. So 50,000 rupees is included in 82,000 for one more time. And for one more time, while calculating this 10%, 50,000 is subject to tax once again. So 50,000 is subject to tax for 3 times in a single transaction. Once when 50,000 was being taxed over here, second time when the 50,000 rupees was being taxed over here, and the third time when 50,000 rupees was being taxed over here. So 3 times same wood is being taxed 3 times in a single transaction. This is a single transaction of preparing a dining table and selling it. Wood is being taxed 3 times. Wood is being taxed 3 times. That's the problem. Now coming on to this 20,000, which is the labor of Mr. B, which is the services, the skilled services which Mr. B has performed on this particular dining table to make it sellable, to make it further usable. Mr. B has employed 20,000 rupees worth of labor, services worth rupees 20,000 on this particular dining table. So this 20,000 rupees is being now taxed at this 10% over here. Okay, this is for the first time when 20,000 rupees is being taxed. Now the second time when 20,000 rupees is being taxed is over here. 82,500 contains an element of 20,000. Remember? Yes, sir. So 20,000 is being taxed again at the rate of 10%. When you calculate 9250, 20%, 20,000 rupees is again included in 92,500. So it is again being taxed. So 20,000 rupees worth of labor is being taxed twice, once over here and once over here. This is double taxation. This is multiple point taxation. And what is tax on tax? Cascading effect of tax. Tax on tax. Multiple point tax. That is, okay. Can you see 5,000 rupees is included over here? Yes, 5,000 rupees worth of tax is included over here, right? On this 5,000 rupees, Mr. B has to pay tax at the rate of 10%. This includes 500 rupees of this 5. So tax is being levied on tax. This 5,000 rupees is tax. 50,000 rupees is value of wood. 5,000 rupees is tax. On tax we are again calculating tax, and on tax we are again calculating tax. So tax on tax on tax on tax. This is known as cascading effect of tax. This is known as cascading effect of tax, and that is the biggest lacuna, that is the biggest blunder which used to have in the erstwhile system. And that is why 20% of indirect tax was the tax rate which earlier people were paying, despite of the fact that the government of India told everyone that we have only 10% tax, or we have only 8% tax. No, effectively it used to double or triple. Effectively used to be more than what government used to say, because of these problems, multiple point taxation. These were the problems in the erstwhile tax laws, because of which the erstwhile tax laws were not appropriate, were not suitable. These were the reasons because of which erstwhile tax laws were not suitable. Erstwhile tax laws were not appropriate. These were the reasons. These were the basic problems in the erstwhile taxation. Now coming on to a situation where GST has eradicated these problems. How has GST come to rescue? How has GST eradicated all these problems and has done away with all these problems? Now coming on to that proposition. Okay, I'm going to copy this particular example once again, and I'm going to now do the correct computation. I'm going to do the correct computation as per the GST laws. What should have been the correct computation? I'm going to do that now. Okay. Okay, sir. Let me delete the old computation so that I can prepare the new computation. Okay. I'm deleting the old computations, guys. All these old computations I'm deleting. You don't have to delete it. You have to draw another diagram. Okay. Don't delete it. Don't delete it. You don't have to delete. You have to draw another diagram. You have to write old taxation system in the first diagram and the GST system in the new diagram. That is what you have to write. Okay. Okay, sir. All right. Now, Mr. A selling wood to Mr. B for rupees 50,000. value of the wood is 50,000. 10% is the GST which is charged by Government of India. 5,000 rupees is the GST which is being charged by Government of India. Absolutely fair. 55,000 is what Mr. A is recovering from Mr. B. Fair enough. Fair enough. Okay. Now, Mr. B has got wood worth rupees 50,000. Please note, Mr. B is not in the new GST regime. In the GST world, Mr. B is not going to treat 5,000 rupees as its cost, like in the erstwhile regime. In the erstwhile regime, Mr. B used to treat it as cost, but now 5,000 rupees will not be the cost. Cost of Mr. B will be 50,000 rupees. Mr. B is going to add 20,000 rupees as the value addition. So the total amount which Mr. B has spent on this good is 7,000 rupees. It is subject to tax, indirect tax at the rate of 10%. So 7,000 rupees is the tax which is leviable by Mr. B. Mr. B has to pay Government of India 7,000 rupees of tax. But before paying this 7,000 rupees to Government of India, Mr. B is going to get a credit. Mr. B is going to get a credit, which in GST world known as input tax credit. Mr. B is going to get a credit of 5,000 rupees. And Mr. B is going to pay only 2,000 rupees to Government of India. Because of a simple fact that out of the total value of the goods which are being purchased, 50,000 has already been subject to tax. So on 50,000 we are not going to pay taxes again. We are not going to pay taxes again. We are going to take the credit of the taxes which have been paid on 50,000 rupees by Mr. A. We are not going to pay taxes on 50,000 rupees again. So I'm going to get a credit which is known as ITC credit. This is a peculiar phenomenon of GST. Okay, we're going to get a credit, and the amount which is being paid to Government of India is only 2,000 rupees. So what is the amount which is being paid to Government of India? It is 2,000 rupees. This is the amount paid to Government of India. Okay, by Mr. B. So in the erstwhile regime, Mr. B was paying a huge amount to Government of India, which is 7,500. Okay. Now Mr. B is paying only 2,000 rupees to Government of India. The taxes have lowered. Why? Because tax is eliminated. We are not paying tax again on 50,000 rupees. We are not paying tax again on 50,000 rupees. No, we don't have to pay tax on 50,000 rupees again. Right? So only on value addition, whatever value addition Mr. B has done, taxes are going to be levied only on that, which is to 20,000 rupees, and 20,000 rupees, 10% is 2,000 rupees. Perfect, sir. Got it. Okay. Okay. Now coming on to Mr. C. Now Mr. C is going to calculate tax for its own liability, which is 10,000 rupees is the value addition which Mr. C has done, right? Mr. C has added a marble top on the dining table. So Mr. C is going to calculate, the manner of calculation will be 50,000 rupees, which is the wood which is supplied by A. B has added 20,000 rupees as its own value addition, and 10,000 rupees is being added by Mr. C. Mr. C has added 10,000 rupees to this particular dining table. So the total amount which is computed for this dining table is 80,000 rupees, right? On this 80,000 rupees, the amount of taxes which are being calculated are 8,000 rupees. Right, this is a tax which is calculated, indirect tax, right? Now, before we pay this to Government of India, 2 ITC is going to be claimed by Mr. C. One which is paid by A, another one which is paid by B. So 5,000 paid by A, 2,000 paid by B. So the net amount which Mr. C is going to pay is rupees 1,000. Again, on value addition, whatever value addition Mr. C has done, which is 10,000 rupees, only on that amount Mr. C is required to pay indirect taxes. Not on the entire amount. Not on the entire amount. Only on the value addition Mr. C is required to pay taxes. So on 10,000 Mr. C is required to pay taxes at the rate of 1,000 rupees. And that is how the cascading effect of taxes were curtailed. Now, what is the manner of claiming this ITC? How do you claim this ITC? How do you set off the ITC? All these things we are going to study in our entire subject, and that is what our entire subject is all about. This is just a gist of it, just in summary that I'm trying to explain the benefits of GST. The entire subject of GST is all about how to take this credit, how to carry forward these credit from one person to another person to another person, how to carry forward these credits, how to reduce the credits from our GST liability. All these things we are going to study in this particular subject, which is GST. But at this point in time, I want to make just one very important point, that GST eliminated the problems which were faced by our earlier regime, which were of multi-point taxes. Earlier we had this major problem of multi-point taxes. Taxes were levied at multiple points on the same transaction, on single transaction. Multiple taxes were being levied. This problem was curtailed. This problem was eliminated by GST. Now the second problem which was curtailed by GST was multiple taxes. Yes, on single item there were multiple taxes which are being charged. So for example, if I'm manufacturing, say, this calculator. This is a calculator. I'm manufacturing this calculator. I first have to pay excise duty on manufacture. Then while selling it, I have to pay sales tax. There's third tax, which is service tax. So if this is good, then sales tax is applicable on it. If I'm providing services, then service tax is applicable on it. And the lacuna was there were certain items on which both sales tax and service tax was being levied. Yes, multiple taxes. And I've seen this in my practical experience. So I have worked with the big four organizations, Deloitte and KPMG, for over 10 years, guys, in my career in taxation and their audit division. I've seen invoices of Oracle. So have you heard about Oracle? Oracle software system, it's one of the largest software developers of the world, right? And it manufactures database management systems. It manufactures softwares which are given to industries in which they prepare their books of accounts, in which they prepare their entire system, entire scheme of things they prepare over there. So Oracle is a very famous software, it's a very famous database management system, and I used to do taxes for Oracle. So when you purchase Oracle, or when you download any software, or when you install any app on your mobile phone, either you classify it as goods or classify it as services, right? Can be only one, right? You cannot blow hot and cold water through the same pipe, right? It can be hot or cold, can't be both. You cannot say that this is a calculator and this is a mobile phone. No, either it's a calculator or a mobile phone, right? Yes, mobile phone can contain features of calculator also, but that is mobile phone, right? The primary use is mobile phone. But Indian laws were so, what should we say, dilapidated. They were so hypnotized, or they were absolutely, there were big lacunas in the system, that when Oracle used to sell software to any person, that particular person used to pay two taxes: one, excise duty, sales tax, and service tax. Sales tax, assuming that software is a product, and service tax, assuming that software is a service. See the amount of confusion that you're creating in the minds of the foreign companies who are coming to India. What is the amount of confusion that is being created in the minds of foreign companies which are there in India? They'll be laughing at you. They'll be laughing at us. They'll be saying either software is a product or it's a service. It can't be both. But Indian laws were saying it's both. According to the definition of service tax, software was categorized as service. According to the definition of Sales Tax Act, the software was being categorized as sales tax. Now, this was the biggest blunder which indirect taxes could have, and therefore there were multiple taxes on the same transaction: excise duty, sales tax, VAT. So multiple taxes on the same transaction. Now, this multiple tax has two meanings. This multiple tax has two meanings. Number one, different kind of taxes. Different kind of taxes. And the second meaning of multiple taxes is that taxes by different states. There were multiple taxes in two respects. One, different kind of taxes like service tax, excise duty, etc. Service tax, excise duty, sales tax, etc. Okay, there were different kind of taxes which were there on this transaction. Secondly, there were taxes by different states. So what is this taxes by different states? I'll give you an example. Okay, suppose in this particular example, Mr. A is from UP, Mr. B is from Mr. A is from UP, Mr. B is from Haryana, Mr. C is from Rajasthan. Suppose you have different states, and different states have different taxes. Okay, so suppose if you are having a transaction where multiple states are involved, like this transaction where multiple states, one product is going through multiple states, right? So each of the state used to have a different IDT regime. Each of the state used to have a different sales tax regime. So there were multiple taxes at each state level which were levied on the products, and the cost of the product used to get inflated. This is the meaning of multiple taxes in respect of different states. So different states used to levy multiple taxes on the same product if by any chance the product is going to travel through different states. Now this was the big lacuna. This was a big problem. And states were reluctant to give any credit. So there was no input credit mechanism. They were not ready to give credit in the erstwhile indirect tax system, because each state had a different law of indirect taxation. There was no combined law, and therefore the need for one country, one tax, one nation, one tax was devised by the government. Every state had its own different indirect taxation law. That was a big lacuna in law in the erstwhile regime. So multiple taxes were there. Okay, multiple taxes means taxes by different states and different kinds of taxes. Okay, then the next is compliance burden. Yes, if multiple states have different kind of sales tax, then each state would require a different kind of compliance mechanism, different kind of form to be filled for submitting the taxes, different kind of returns which are to be filed with the authorities, giving details of the transaction which have happened during the year. So multiple states would demand multiple compliance burden was there. So in a same transaction, in one transaction, the assessee had to file 3 to 4 returns. One return used to be filed with UP government, another return used to be filed with Haryana government, another return is to be filed with Rajasthan government, and we have to comply with laws of all the 3 governments. This was a big problem for businessmen. So there were additional compliance burden in the erstwhile sales tax or VAT law. Then partiality. What do you mean by partiality? Partiality means every state used to have a different tax rate. So UP used to have 12%, Haryana used to have 13%, Rajasthan used to have 10%. In this example, I have given a common tax rate, but this was not the situation in reality. In reality, tax rate was different for each of the state, and when tax rate is different for each of the state, it creates partiality. Same product being produced in Delhi will cost less. Same product being produced in Haryana will cost more because the indirect taxes are more. Partiality. So the erstwhile law had partiality in it, and therefore there was a need for one nation, one tax. One nation, one tax. There should be one tax rate for the entire country, single tax rate for the entire country, one nation, one tax. And that was the advent of GST in the country. Thought process was there long back, because the problems were apparent long back. But the steps were taken because, guys, India is a big country with huge diversity in culture, huge diversity in land marks, and countries are different, states are different, language is different, laws are different, everything is very different. So considering everything which was different, the need was felt for one country, one tax. And once GST was introduced, what were the benefits which were ensued to the industry and to the entire country? These are the benefits of GST which were ensued to the entire country. First benefit was seamless, means smooth flow of credit. Earlier flow of credit was not there. The taxes which were paid by the earlier limb were not given as a credit to the next party, next person. So credit was a big problem. It used to lead to cascading effect of taxation, tax on taxation. It used to lead to that kind of a scenario. So GST made it possible to have an effective, smooth mechanism for taking credit of taxes which are paid by the earlier person, just like I've shown you in the example. Okay. Second, removal of cascading effect. Yes, tax on tax were avoided. Did you notice one very important thing? Did you notice it? While I was calculating the value for B, I did not include 5,000 rupees over here, which was there in the erstwhile regime. Over here 55,000 was there. But in the GST regime, I took only 50,000. So this was a minute point, that we cannot have tax on tax. So tax on tax was removed using GST norms. So removal of cascading effect. Cascading effect means double, triple taxation policy. So cascading effect was removed. Then competitive pricing, the pricing became competitive, pricing became less. So, to conclude our example, let us see our example. So what is the price which Mr. D had to pay for the this entire dining table? Mr. D had to pay 80,000 rupees plus 8,000 rupees, which was indirect tax. So 88,000 is the amount which Mr. D had to pay to Mr. D. Mr. D had to pay to Mr. C for this dining table, 88,000 rupees. In the old example, what was the amount which Mr. D had to pay? 1,01,750 rupees. So cost of product, was curtailed, was reduced. And now, guys, please tell me, what is the tax which government recovers from this particular transaction? What is the tax which government recovers from this particular transaction? The tax which government recovers from this particular transaction is 5,000 rupees plus 2,000 plus 1,000, 8,000 rupees is the tax which government recovers from this particular transaction, which is exactly 10% of the product value, which is fair, because in this particular example, the tax rate was 10%. So the tax which is collected is 8,000, and in the earlier example, tax which was collected was 21,700, which is a huge amount, humongous amount, extraordinary amount. So as you can see from this example, guys, it gets very clear that GST had a lot of benefits, Okay. Then competitive pricing. Pricing became competitive. Pricing was reduced of each of the product. Increase in government revenue. Yes, government revenue was increased. Why? Because earlier, when every state was working in a silo, every state had its own different law. It was working independently. It did not have any connect with the other government. So I'll give you an example. I sell 10,000 books from Delhi to Haryana. Okay, in Delhi the record says that I have sold 10,000 rupees, but when in Haryana, when purchases happen, then I show only 2,000 books, not 10,000, just to evade taxes in Haryana. I do this. Now I know that Haryana government and Delhi government are not communicating with each other. When I know this fact, I can have an edge over this particular lacuna which is there in law, loophole is there. Haryana government and Delhi government are not in touch with each other. If they are not in touch with each other, they will never be able to know what is my my reconciliation is. They will never be able to know. Products which are starting from Delhi, 8,000 products, and products which reach Haryana, only 2,000 products. I have evaded tax on 6,000 units. Now, when each of the government is well connected after GST, revenue has increased for government as a whole. Revenue increases for government as a whole because a lot of loopholes are plugged, a lot of chains are being maintained, reconciliation happens, therefore the revenue is increased for government of India. So increase in revenue happens. Easy compliance. Compliance happens only once at national level. Okay, so there's no separate return which is to be filed in, say, UP, Delhi, Rajasthan. There's no separate returns which are to be filed. One nation, one tax, only one return to be filed, tax to be paid at one portal only. No different portals. Earlier, the tax was to be paid first at UP government's website, then at Haryana government's website, then at Rajasthan government's website. So the tax was being paid in different websites. Nothing doing. Now taxes to be paid only one central portal, which is made by GST, which is known as GSTN. That is the GST network. Only one compliance burden is there. So compliance burden is reduced. Compliances have become easy. The best part is uniformity in tax rates. Now Delhi government cannot charge 10%, Haryana government cannot charge 12%, UP government cannot charge 8%. All the governments will charge common tax rate from all the transaction, from all the goods and services. One tax rate for all the states which are there in the entire country. Uniformity in tax rates. And of course, improved competitiveness. Why? When one tax rate is being charged by each and every look and sphere of the entire state and entire country, when same uniform tax rate is being charged, then no one loses. There's no partiality, right? If a businessman produces same good in Delhi or Haryana, doesn't matter. The tax rate is same. So competitiveness increases. Partiality is not there. Competitiveness increases. And this is overall benefit of GST, which has accrued in the country. Those small taxes were eliminated. Excise duty was eliminated, although there are some products on which excise duty is there. VAT was eliminated, service tax was eliminated. All those small taxes were eliminated, and there was only one nation, one tax, which is GST in terms of indirect taxes. So my next slide will tell you that there were plethora of taxes which were subsumed in GST. The excise duty was eradicated. Central excise duty was eradicated. State excise duty was eradicated. Service tax was eradicated. Additional duties of excise were eradicated. All these were subsumed in GST. Similarly, there were many taxes which are levied by state, like Delhi government used to levy some indirect taxes, octroi, the toll tax, right? All those were eliminated. Sales VAT tax was eliminated. Central sales tax was eliminated. Purchase tax was eliminated. Entertainment tax, luxury tax, entry tax, tax on advertisement, everything was subsumed in GST. One nation, one tax. Ease of doing business. Now your homework is that you have to find out and give me a list of taxes which were not subsumed in GST. Taxes which were not included in GST, you have to give me a list of those taxes which were not included in GST. Those still stand even after advent of GST. They still stand. You can use Google, you can use your book which is being provided to you, all those things, but give me list of taxes which are not subsumed, which are not included in GST, which were still there even after advent of GST. Those taxes, those laws are still there, those taxes are still there. You have to give me a list of all those taxes. That's your homework. In the next class, the first thing that we are going to study is the taxes which are not subsumed in GST. So yes guys, that's all for this particular session. I hope you got some useful insights on the basics of GST. Okay, not very important from an exam standpoint, because in exam these basic questions are not going to come. Difference between direct and indirect taxation not going to come, but for your own consumption, for your own analysis, for your own benefit of understanding, it's really important to really delve into all these concepts, because these concepts are going to be really important from an exam standpoint to all of you. So yes, that's all for this particular session guys. We'll be meeting in a subsequent session with more such useful insights on GST, more such useful content on GST. We're going to meet in our subsequent class. One more important homework for you guys, you have to go through the content which is given in the book. I've discussed all this content during the class. Okay, so what is the difference between direct and indirect tax? What is the need for GST? What are the benefits that have accrued after GST has come in? You have to study all these portion in your book, the book which I have supplied to you. You have to study all these, underline important words, understand the meaning of each and every word. If you're not able to understand anything, please feel free to come back to me and ask meaning of anything and everything that you want to know. And till here, not the salient features. I'm going to do salient features in my next class. So till this particular point, you have to study the entire book. You have to read the entire book. And homework number 2, you have to do this particular homework. Homework number 3, you have to prepare these charts in your register, so that in the next class you are up and running for the next portion of the syllabus. These charts are to be made in your book properly, neatly, tidily, using scale, proper pencil, pen, whatever you want to use, but put these charts in your register. Make it a habit that after the class you will make all the charts in your register, or during the class only pause the video and make all those charts in your register. Make it a habit for you. This will be a very good habit for all of you. Okay, so yes, that's all for this particular session guys. We'll be meeting in a subsequent session. Till that time, all the very best and happy studying. Bye bye, see you in the next session.